Hey, here's how to avoid UAE tax penalties by keeping your records in 60 seconds. Base rule. Under the UAE Tax Procedures Executive Regulations, records must be kept 5 years after the tax period for a taxable person and 5 years from the end of the calendar year in which the document was created for persons other than taxable persons. Which documents exactly? The law explicitly includes balance sheet and P&L, payrolls, fixed asset records, inventory records, and stock counts, plus supporting documents like business correspondence, invoices, licenses, and contracts, and documents showing any choice, assessment, determination, or calculation basis for tax. And here's the nuance. Retention can extend, plus 4 years, or until finally settled, if there's a dispute. Plus 4 years if you're subject to a tax audit that has not been completed, or if you're notified of an audit before the base period ends. And if you submit a voluntary disclosure in year 5, plus 1 year from the submission date. Moreover, for VAT, capital assets records, at least 10 years. And VAT executive regulation requires real property records 15 years after the end of the tax period. For corporate tax, it's 7 years after the end of the tax period. And this also applies to exempt persons to prove their exemption status. What if you lost documents? Electronic copies are allowed, but the data must match the original and be extractable and easily readable when requested. The FTA may accept English, but can require a certified Arabic translation. So yes, back up your files. If you don't keep required records, 10,000 dirhams per violation, 20,000 dirhams if repeated within 24 months. And from April 14th, 2026, penalties change. Late payment is 14% per annum, applied monthly, and voluntary disclosure is 1% monthly, 15% plus 1% after an audit notice. So don't just close the year, archive and backup.